If your banker asked for a set of compiled financial statements, or an investor or business buyer asked for a set of reviewed financial statements, would you know what to give them? Hi, I'm Dave Wilkins, founder and president of Wolverine Business Solutions. We help business owners like you tackle business challenges, solve problems, and boost financial performance. If you think all you would have to do is turn on your trusty accounting software, print off a set of financial statements for them, and they would be happy, boy, would you be in for a surprise. You see, the preparation of financial statements is all dependent on who's asking for them. Today, we'll discuss the 4 levels of financial statements, what they are, why they're needed, who asks them, and the differences. Think of financial statements as your business's report card, showing its financial health at a specific point. As I've said before, they were developed for bankers, investors, and the tax authorities, not business owners. The key reports are the balance sheet, which shows the assets and liabilities like a snapshot of your net worth, then your income statement, which tracks revenues and expenses over a period, and the cash flow statement, which lists your cash inflows and outflows. The 4 levels of financial statements, preparation, compilation, review, and audit, have evolved over time to meet the assurance needs of those who request these statements. Each level involves more effort and cost that corresponds with the level of assurance needed, complying with accounting standards and regulatory requirements. So we're all on the same page. In accounting, assurance is the process of verifying a company's financial records and procedures to ensure that they are accurate and complete. Here's an example to help explain the 4 levels. Let's imagine you're an entrepreneur with a fantastic product or service. As you launch and grow over time, different stages of your business journey will require different levels of financial statements. We start with the preparation, which is the basic level and is good for brand new businesses. Your financial information results are summarized into a clear, standardized format. The effort to prepare is low, especially if you use a good accounting software and you do most of the work and may have your CPA finish the preparation. And who asks for it? You to track your results and progress. There's no guarantee of accuracy, but it helps you see what's happened. Compilation is the next level and is needed when you are seeking funding. Compilation involves basic checks of your financial records for inconsistencies and assembling them into the financial statements. The effort required is a bit more as you provide the information and your CPA compiles and performs basic checks for glaring inconsistencies, misclassifications, or mistakes. Who asks for it? Angel investors and bankers. They typically need a compiled set to get a general sense of your financial landscape before deciding to invest or give you a loan. The review level is for established businesses who are looking to partner with larger businesses, venture capitalists, or to sell. At this level, a CPA reviews the details behind the numbers, asking some detailed questions about the numbers and how they were recorded, performs procedures to get a better sense of whether your financials are materially accurate, and prepares a review statement to accompany these statements. The effort required is high as the CPA performs a thorough review, but not to the same level as an audit. And who asks for it? Investors such as venture capitalists and business buyers. They often require reviewed financial statements for a more thorough assessment of your financial stability before entering into a deal. And the 4th level, the audit level, is the top level. It is required for going public or for franchising. Here, the CPA goes all in, meticulously examining your records, testing your financial controls, and potentially even contacting vendors and customers to verify the accuracy and completeness of the numbers. The audit report from the CPA is a key part of the statements. The effort required is very high due to the extensive examination by the CPA and the amount of supporting documentation you need to make available. And who asked for it? The SEC and IPO underwriters. The Securities and Exchange Commission requires audited financial statements for companies that are going public or are offering a franchise. Similarly, underwriters managing your initial public offering will require them. Choosing the right level depends on your goals and circumstances. Preparation for brand new businesses with basic finances. Compilation for growing businesses needing financials for funding. Review for established businesses seeking partnerships or larger investments. And audit for public companies or those seeking significant public investment. Don't let financial statements become a roadblock to your success. Wolverine Business Solutions is here to help. If you have questions about choosing the right level, schedule a call or leave a comment below. Thanks for watching. If your banker asked for a set of compiled financial statements, or an investor or business buyer asked for a set of reviewed financial statements, would you know what to give them?